Okay. Yeah, we'll get started a minute early. Just give me 1 second. Sweet. Great. As I said, if you've got questions throughout the webinar, you can use the chat on the side to ask questions throughout, and I'll get to them either at the end or as we're going. So the first thing I want to go over is the US dollar. Now, I've touched on this a couple of times today on different platforms. I put some analysis in the Discord, put some on Telegram, on Twitter as well. But I just want you to take a second and just look at the dollar. So we often have, or we've got a very, very clear pattern. Now, this uptrend that we've got on the dollar has been intact for 17 years. This started in 2008. So right after the GFC, we developed this uptrend and it's still not broken. So if we just look at the behavior of this, so we often have this sideways cluster, and again, another sideways cluster right here. But we also have these expansions to the upside on the dollar that, again, are repeating over and over. So these are what we call cycles in the market. Phantom, hello, it's good to see you. Hope you're well. So these are what we call cycles. Now, this can be a little bit of a tricky thing to grasp for new traders because it's not a great prediction tool, but it also can be quite a good prediction tool at the same time. Now, what I mean by that is right now, the economics for the dollar are actually quite dire. There's nothing that's... Phantom, you've not missed anything. We literally just started. There's nothing right now on the dollar that deserves or will drive it higher. The only thing that I could even start to try to justify was a positive talk between China and the US. So on, I think it was Thursday or Friday, I was live streaming at the point. I can't remember if it was Thursday or Friday now. But we saw a call between Trump and Xi Jinping, and it went very well, according to Trump. Obviously, we don't have the call, but Trump said it went well, so the market was reacting quite nicely to that. We also had a positive NFP. So on Friday, NFP came out at 139,000. Forecast was 126,000. So it was a beat, which is good. However, it was still less than previous. So previous number was 147,000. So although we surpassed expectations or forecast, we're still seeing a downturn in the labor market. Now, JOLTS also overshot forecast and also overshot previous. So JOLTS came out at 739 million, forecast was 711 million, and the previous was 720 million. However, I forgot to put this over here. So that's pretty good, again, a positive JOLTS and a relatively positive NFP. Average hourly earnings also took a little bit of an upside here at 0.4. Forecast was 0.3 and previous was 0.2. So although I said the labour market's deteriorating, it's not as bad as maybe that I made it sound. However, the downside of last week's news was the PMIs. So if you don't know what PMIs are, we have services PMI and we have manufacturing PMI. And just to quickly nutshell this, it essentially tells us how the economy is doing. So the benchmark for PMIs, for both PMIs, manufacturing and services, is 50. Anything above 50 is viewed as positive. Anything below 50 is viewed as negative. So you can see manufacturing PMI came out at 48.5 and services PMI came out at 49.9. Now, obviously, this is only 0.1 below 50, but it still shows the story of contraction in the US. So the US isn't showing expansion, which is obviously what you want to see. If the economy is expanding, then obviously it's growing, it's doing well. If it's contracting, it's getting less money in, it's not doing as well. So we're seeing the sort of signs of contraction. The labour market, again, not the best, but it's definitely not too bad. I forgot to mention unemployment rate stayed at 4.2 for the third month in a row as well. So unemployment's not high, it's not low, it's pretty much just sat in the middle ground. Nothing really to discuss too much there. However, going back to the dollar chart, let me just pull up the candles here. So I am looking to buy the dollar, but not just yet. So I think, and this is a big think, because, let me just change that. So the theory I've got with the dollar is we're not going to break this 17-year trend. I just do not see that happening right now. Again, tariffs or the trade war seems to be easing off a little bit. However, the data for the dollar still isn't good. So that puts me in a situation where I'm not bullish dollar yet, but if we can come down into this 96 area, I would start taking sort of predictive longs or speculative longs. And this is where it gets tricky, because even if there is nothing going on, if there's no reason to buy here, I am still going to buy it. Again, just looking at the historical cycles of the dollar, might be able to get in preemptively, and we might have a bounce. And then here, maybe if we bounce off this trend line, then maybe we have something that will some sort of catalyst to drive the dollar higher. Of course, when I say I'm going to buy the dollar here, I don't mean I'm going full margin. I don't mean I'm going to go heavy. It would just be maybe one position on something like euro dollar, half risk, just to see what happens, and that would be it. However, until then, I have no choice but to stay bearish on the dollar, at least until 96. Now, that could be, I could be late. Maybe the dollar's going to just jump from here. We are seeing wicks to the downside. We've seen, this is the weekly time frame, by the way, multiple weeks of rejection at this level. So again, maybe next week we're going to have some developments in tariffs and we could start seeing more upside on the dollar. But right now, again, that's just a bit too preemptive for my liking. So let me just quickly pull this up, which is the COT data at the moment. So for anyone that, Sonic, sorry, just give me a second. Let me just finish this point. I'll read your message. So for anyone that's been sort of listening over the past couple of weeks, I've been talking about this 50% level on COT. So this, this yellow line essentially tells us the percentage of long positions. It's like a moving average, if you will. But this 50% level has been acting as a support since 2023. So if we just look, came down to 50% longs, bounced off, 50%, obviously slightly shot under 50%, but it still bounced up pretty much right after. Similar thing here, down at 50%, shot up. Right now, we're at, we were just below 50 and we just popped back up again. So this is telling us that institutions are buying the dollar, which again is interesting, but it's not enough really for us to get too heavily positioned. Now, just to sort of counter that point a little bit, I know I'm going back and forth on long dollar, short dollar, but I'm going to get to the point in a second. So we are actually seeing institutions pretty heavily short, and obviously I'm not talking about COT data now, I'm talking specifically about the actual positions they're in. So we've got MUFG that's currently got a sell limit dollar on dollar yen, so short dollar. We have got Bank of America, long euro dollar, short dollar. Refinitiv, short US dollar. Short US dollar yen. We've got Refinitiv again, buying euro dollar. We've got Morgan Stanley buying euro dollar. Now, this puts me, the final point I've got for this is just think about what happens in the markets when the market gets crowded. So if everyone is now sat selling the dollar, what's going to happen? Well, it's likely, and this is sort of just through market dynamics, it's likely actually going to reverse. And a great example of that is the S&P. So remember when we had tariffs, when it was the hot topic, I mean, it still kind of is the hot topic, but when the markets were quote unquote crashing, when the S&P dropped 20% due to tariffs, this period here, everyone was heavily short. When I say everyone, I mean like the sort of smart money hedge funds, AAII investor report, it was all very, very bearish. And very quickly, when we got to extremes on put to call ratios, we reverse. So that's, again, just typical normal dynamics. When positions or when markets are crowded one way, we do often see it reverse back the opposite way. Now, again, there is no catalyst for me to actually take dollar long positions just yet, but I am paying attention very, very closely. So that brings me into what we're watching this week. Okay, let me just quickly read these messages. I thought dollar has been relatively positive data. NFP was very good. It was good, but it was still worse than the previous report. And again, in fact, let me just show you the economic heat map for the dollar, just to sort of visualize what I'm actually saying. Just give me a second. Yeah, here. So you can see it's not awful, but it's not in a position where you could really justify being heavily bullish just yet. I found it concerning the revision to the downside of the last two NFP reports. Yes, so NFP, again, let me just pull that up for you. Labor market, NFP. So yeah, you can see NFP has been beating forecasts, but yeah, it's still on its way down. So you can see the Revision for April, obviously it came out at 228, got revised down to 185. Previous one came out at 177, revised down to 140. Will we see the same pattern? Maybe. I mean, we're on a 3-month streak now, beating forecast but missing previous. So yeah, we'll have to keep an eye on that. James, what you once mentioned about USD COT being 50% in the long term and then swinging up again, still happen, the institutions bought again. Yes, Sonic would. Yeah, say it's great minds think alike, eh? Okay, right, let's get into the watch list. So yen is interesting. So as anyone that's been in elite traders for the past couple of months, I would say at this point, you will know I've been heavily bullish on the yen, but the caveat to that is heavily bullish long term. I want to say long term, I mean over the next 12, 18, 2 years, 3 years term. It's not a short term trade idea. So short term, I actually do expect the yen to devalue slightly. And I'm not saying it's going to continue the crash that we've seen, but just slightly enough for us to catch a swing trade, I think is completely valid. Now that derives from obviously the yen being heavily appreciated and heavily bought due to risk-off markets that we've had. And again, I am expecting the markets to turn a bit more risk on. I mean, a great example again is the S&P. We've had a huge turnaround there. The DAX, complete full correction and actually broken all-time highs freshly. We've had the NASDAQ, the Dow, all doing very, very well. The Russell's back up as well, indicating obviously risk is back in the market. Hence, sell yen. So that's the sort of idea there. Obviously the yen data is still very, very lackluster. Let me just quickly pull up the elite thing. So again, if anyone is relatively new to elite traders, this is, you'll have seen me put this in the elite research. It's completely free, anyone can get access to this, but I put it together every week. And it's just a great way to get a quick understanding. Obviously you can get a deeper understanding, but just to quickly confirm an idea on that. So the yen remains fundamentally undervalued with long-term macro tailwinds, which is what I just said, but near-term catalysts are limited. The Bank of Japan is in no rush to hike again. Inflation momentum is fading and global rate differentials continue to drive capital away from the yen. So short-term, yen bearishness makes a lot of sense unless we do get some sort of elevation in global risk, whether it be wars or tariffs, whatever it may be. That's sort of the risk if we get some sort of surprise in obviously the risk. However, again, as things stand right now, New Zealand yen seems like a really, really good idea. So if we're expecting a week, sorry, excuse that arrow, I'm not sure what that was supposed to be. So yeah, if we're expecting the yen to drop, New Zealand dollar is really bolstered at the moment by the hawkish RBNZ. So the fundamentals for the New Zealand aren't necessarily great, but again, we've got the hawkish RBNZ. The Bank of Japan's in no rush to hike rates, so it puts us in a position where we've got quite a nice central bank divergence there. So I'm looking for, as I always do, 50% 618 pullback. The 200 moving average is bullish, so I'm looking for a very simple pullback into the 50% and then continuation to the upside. Just being very cautious of the previous highs of possible resistance, may even take profits at this level. Obviously, we'll see how that develops if we get into the trade. The other thing, a lot of the yen pairs, you will notice if you go onto the daily, are coming up to this 200 daily moving average, which could be a little bit of a death sentence if not managed closely. I mean, you could, very similar thing here, as you guys know, or as you should know, 200 moving average is a very, very widely used indicator, not just for filtering trends, but also as dynamic support and resistance. If we have a very established trend, and we pop up to the 200 moving average like we did here, and like we are about to do again, it can drive in some sellers to push the market lower. So that's just a little bit of a cautionary tale, just be careful. So I'll be monitoring that closely again, if we do jump into this trade, but it's a similar story for a lot of the yen pairs. Euro yen's also on the watch list, but again, it's coming up to this. Oh, sorry, no, it's not. I was getting mixed up. I think it's Aussie yen actually that's coming up to the 200 again. So, well, that brings me on nicely to Euro yen. Exactly the same setup. Pretty much the same reasoning. We've got the ECB that's currently sat in a neutral tone. We obviously had their rate decision. I think their rate decision was last week. I can't remember. Again, last week was a bit of a blur for me after that, after that trading marathon. But yeah, the ECB is currently sat neutral. ECB remains neutral stance with flexibility. So we kind of got we don't really know. We're not going to cut. Yeah, we've got, we're not going to hike. So it was kind of just a very neutral tone. There wasn't really much to go off. But again, that puts us in a position where the Bank of Japan's not in a position to cut rates, to hike rates, but the ECB is currently bolstering the euro slightly. So we could look for this 50% pullback, continuation to the upside, and the RSI is also slightly overbought here. So just a natural market correction does look due in my eyes. Euro dollar. Now this is where I get a little bit flip-floppy on the dollar again, because again, I would absolutely love to be bullish on the dollar. I really hate being a bear on the dollar because, although we've had a very, very difficult time with the dollar recently, we cannot forget it is the global superpower and it is the global reserve currency. You cannot argue that. So to sit there and say the dollar's going to crash or whatever, de-dollarization, I think is very naive. Keep in mind, if there was de-dollarization, it wouldn't just be the US it wouldn't be just an isolated problem for the US. That would be a global catastrophe. There would be massive, massive problems in almost, every economy would suffer. So it's not a case really if we are going to see de-dollarization as far as I'm concerned. I think it's just a bit of a difficult time and we will see a recovery eventually. So that leads me into two ideas on euro dollar. Now, I'm not 100% set on either just yet. I would short term quite like to be a buyer of euro dollar, actually. Entry is a little bit tricky. So there's either an entry right here, sort of on the previous low, or we wait for a deeper correction into this 200 moving average and we take a long position from there. And again, just target these highs. I wouldn't like to be short dollar for too long. It would be at most a very short swing trade, maybe for a week, or at best, in best case scenario, it would be an intraday trade for 1 or 2 days and that's it. Now, the reason on Eurodollar specifically that I'm being a little bit flip-floppy is because of this monthly time frame. Now, this to me is screaming sell, and that's why I'm not really looking to actually sell it, because it's a bit too obvious. Now, the previous two examples are actually a perfect example of why. We come up to this 200, but every time we came up to this 200, we actually got a sell signal. We got these two bearish candle closes on this attempt. We got another two bearish monthly candles on this attempt, and right now we're wicking to the we're showing wick rejections to the upside. But on these two attempts, we actually broke much higher before coming down. Remember, this is the monthly time frame, so it's not a case of having a sell here and then just having a really wide stop up here, because you would have to have quite a bit in capital, and that would take a lot of, that would be a, that would be a 1, 2, 3, 4, 5, 6 months just to get back to break even if you sold here with a stop loss like here. So obviously that's not an option for us. So it's a case really of just waiting to see what we get right now in Eurodollar. Are we going to break higher? In that case, yes, some short-term longs are completely valid. But if we do start breaking lower and we get some sort of confirmation, whether it be positive US data, trade tensions relaxing, dovish ECB, doesn't really matter. Some catalyst to put pressure on the euro or bolster the dollar, then yes, shorts do look really, really good there. But again, it just comes down to that age-old saying of if it looks too obvious, you're about to get fucked. Excuse my language, or I can't remember exactly what the saying was. I hate to say it actually, but I think it was ICT that found that or came up with that saying, but whatever. Next up is pound yen. Similar story. There is absolutely no difference really between pound yen, euro yen, New Zealand yen. We've got the Bank of England that's currently very cautious. They're not they're not expected to cut rates in the next decision. The Bank of Japan, as I said, is very non-supportive of the yen right now. So I'll keep it simple. Longs make a lot of sense here. I shouldn't have to repeat it. Pull back into the 50% level. Look to go long here. RSI is slightly overbought, so we could see a correction there. And again, pop to the upside. Okay. Pound dollar, very similar thing. The pound, however, is a little bit more attractive to me than the euro. So pound dollar longs I like a little bit more than euro dollar longs. Same thing here on the monthly. We are approaching, but we're not there yet. I'd say we've still got, if we do see continued bull momentum, we've probably got another 1 or 2 months of bullish momentum here before we approach this 200 or even start approaching the previous high. So Yeah, that's pretty favorable for me. We've got the weekly moving average bullish, the daily moving average bullish, the H4 is bullish as well. And again, the Bank of England is quite cautious. We're getting aggressive rate cut pricing in on the dollar as well at the moment because tariffs. It's difficult to not difficult to explain. So the effects of tariffs are not reflected in the data at the moment because obviously data, we have what we call leading indicators and lagging indicators for economics. Now, leading indicators are obviously what sort of we see it leading the economy, leading the markets really. But even those things have not really reflected the full effects of tariffs yet, or what they've done to inflation or labor or imports, exports, those types of things. So it's leading the Fed obviously to be very cautious and to be a little bit on the sidelines. But the consensus remains that the Fed will cut rates at some point. Same thing for the ECB, but I think the situation with England is a little bit easier to gauge than the US at the moment. So that's that. The euro pound, I still really, really like the idea of going short. The issue is, I just cannot seem to find an entry. The only entry I've really managed to nail down is on the weekly time frame. So we might be looking at this one again in 2 or 3 weeks, saying, "Oh, we might be get into our entry soon," which obviously isn't ideal. But yeah, it's difficult because the price action is horrible for typical stop loss, take profit entry trades because it's so choppy. So again, if you have done any at all back testing on euro pound using again the typical stop loss entry take profit method, you will find that you get chopped out of the market all the time because it has a very aggressive moves that can just explode in 1-2 days and you're going to be liquidated. So yeah, it can be quite hard to find a good entry. So this may be a case of we actually going for a long-term position here. So we sell with no stop loss, low risk, sort of just DCA style. Sell again if we come up to our initial entry, and then look for this continued downside. And then if we do start breaking higher up, so we'll cut the position. So we could take this one at maybe 0.2 risk, and then another one at 0.3, and then we can cut it for a reasonable loss with very minimal damage. But again, I'm going to have to spend a bit more time and sort of just monitor this market as we go through next week because it can be a bit of a cruel mistress at times. Let me just check these messages. The reality is USD has been expensive the recent years and it's only going down to its normal value, yet some economists are panic mode. Yeah, I mean, they're very typical doomers. I mean, if you look at the narratives that's been spun a lot recently, we've got de-dollarization, rate cuts, tariffs or trade wars, we've got recession and stagflation. So we've got 5 things that are pretty severe. They're not light headlines, recession, stagflation, those things. But specifically stagflation and recession, we have absolutely no, or at this time, we've got some little red flags, but nothing to solidify that that's the situation now or that that's going to happen 100%. So, yeah, I think, I say it all the time. Investors are like snowflakes. They're like the blue-haired, LGBT, trans rights, liberal girls. I'm not a political person, but they are snowflakes in the sense that they're so easily shaken because it's like they're like sheep. If we have tariffs and it's like, yes, it is a concern, but did it really need to drive the S&P down 20%? No, it didn't, to be quite honest with you. So someone sells, and someone else is like, oh, someone's selling due to tariffs, I'll sell. Then everyone else sells. Then everyone else is selling. Then someone buys. We have, and then someone else will buy. And like, oh, okay, now we're going to buy. Bear in mind, nothing's really changed. Tariffs are not done. So the fact that it's dropped 20% and almost corrected with very little developments in tariffs, in terms of like big developments, what's going on? Do you know what I mean? It's like, yeah, anyway, it is what it is. That's the markets. That's what we do. Okay, let me just, again. Sonic, you like the idea of DCA Euro Pound? True, I think Euro Dollar needs to be at 1.4 to be at fair value. Yeah, I mean, Credit Agricole short on Euro Dollar, but it is due to their fast FX model, which is a fair value based model. ECB governor says something about alternative for USD though. Yeah, that's not going to happen. Anytime it might happen, decades down the line, but the dollar's not going to get replaced anytime soon. Anyway, back onto the chart. So not euro, dollar yen is another one I would quite like to sell. Now, this one would need to be hedged because, again, I'm not looking to be a super bear on the dollar. I don't want to be against the dollar for too long. So what I would like to do in a perfect world is actually see the dollar yen create a double top here. We go short, and that's it. We just set and forget. We trail stops and just leave it, but we trail stops relatively aggressively. Behind each high print, we trail a stop just above it. To go with that, I would actually be quite inclined to go long dollar as well in another long-term position. And that brings me on to dollar CAD. I'm not going to go into dollar yen. I mean, we've spoken about the yen a few times. We've spoken about the dollar a few times as well. But that brings me on to dollar CAD. So dollar CAD, I think, actually could be coming into a really, really good long position. But again, this is very speculative because the dollar just doesn't really have a catalyst for me to actually go long yet. Although the data for Canada, in my view, it's not great. Oil's stuck inside, or it was stuck in sideways. Let me just double check. Yeah, I mean, oil has done absolutely nothing since April. It's done nothing. So that's not really a benefit for the Canadian dollar. But yeah, I think if we can come down, that's not what I wanted. Weekly here. Yeah, if we can come down into this previous low and just retest this support or this 200 moving average, I think it would be a really, really good long position to take. Even if we do actually take this on the weekly and just have a low risk long-term position, something like this, take this with, maybe 0.5, 0.25% risk, just let it go and at least we're in the market. And then we can scale in. If we see confirmations, we see data start to pull through, then we can start scaling into this position and building it up a little bit more. So that's kind of the plan at the moment on dollar CAD. Okay, let me just go back. Gold and silver, I've got opposite ideas. So I'd quite like to go short gold because obviously gold's a safe haven. Hold on, my analysis isn't showing. There we go. So yeah, gold's obviously a safe haven asset. It's been bought heavily over the past couple of... I mean, look at this rally that gold's had. It's outperformed massively. And to be honest with you, I think gold's very, very overpriced. We've got, everything's priced in, but yeah, just look at this monthly. It looks like a meme coin. Like if someone showed me this screenshot and didn't give me any context, I would 100% think it's something on Deck Screener or Pump Fun or, one of those meme coin sites. I mean, look at the RSI. But yeah, anyway. So we've got possible rate cuts coming for the dollar, which obviously is a benefit for gold, but we don't have that yet. Tariffs are priced in. Russia-Ukraine seems... I mean, we had a development, I think, over the weekend, actually, with Russia-Ukraine, but I'm not sure how severe that is. So I'm actually not going to focus on that just yet because I need to do some research. But as a whole, Russia-Ukraine is priced in. Middle East is priced in. There is nothing else for gold to do. What else is driving it? There's no catalysts. There's no new catalysts for gold. So I am looking potentially just for some sort of short mean reversion here. Whether that be down to 3,000, which I've spoken about 3,000 before. I still think that's a possibility. But again, going short gold when there's still some market uncertainty, again, tariffs could completely flip around and cause loads of risk off move and we'd be on the complete wrong side. So this will be a case of trailing stops very closely above structure and just keeping ourselves as safe as possible. But I really do think that going short on gold is a worthwhile idea. Again, the monthly is extremely technically overbought. Same thing here on the weekly. The daily looks a little bit unconvincing. I mean, we've been, again, sideways on the daily since April. So where else can it go? Because there's clearly no buying interest above previous highs. Otherwise, you would have broken them like we have done over the past couple of years. So, yeah, I'm taking a bit of a contrarian view here on gold. I think the S&P has risen so much because the DXY has dropped 9%. Maybe that's the fact why it's gone up. Slightly, yeah, but I mean, they're not correlated enough for that to be the sole reason. Bear in mind, obviously the dollar and the S&P are both US based. So if there was really that much of a problem with the US, people wouldn't be back in the S&P or NASDAQ or the Dow or the Russell. But that's just my view. One big beautiful bill could be the catalyst. That's true. Yeah. I mean, yeah, the Elon Musk and Trump thing was hilarious. We were looking a lot at that on stream. It was a very funny thing. Although Elon deleted the tweet about Trump being on the Epstein list, which was interesting. Okay, so silver. As I said, I'm taking two opposite views on the metals. So silver, I'm looking at more from an industrial view rather than a safe haven metal view. We've had a really, really strong rise on silver over the past couple of weeks. I'm looking for a very simple 50% retracement back into these highs. It might even be a break and retest of these highs, then continuation to the upside. I've been eyeing the $40 level for months. For a long, long time, I've been wanting silver to get to that level, and this might be an opportunity to buy it at a pretty reasonable price. Again, the RSI is pretty overbought, so just a natural market movements it looks like it's due for a pullback. Again, a very aggressive candle here, very aggressive candle here. So are we going to see some sort of corrections? In my view, yes, I think that's quite a likely outcome that we're going to have. Euro Swiss. Similar thing, sort of positioning on Euro Swiss around the reallocation from risk off to risk on. So if we look at the effect that we've had on Euro Swiss here, hold on, let me just change that. There. So we've had a lot of downside and recently just a lot of consolidation. I mean, again, this hasn't done anything since April. So the fact that we're having a little bit of an unwind on risk and tariffs seem to be a little bit more optimistic at the moment, I would be quite happy to take a long position back up into sort of not the full pre-tariff highs, but just sort of the middle ground into the lows that we had around this level. Again, we've got the ECB that's sort of neutral at the moment. We've got no real guidance in terms of are they going to cut again or not? It sounds like they might not, as long as they have supportive data for that. The Swiss as well, something you need to keep in mind when looking at the Swiss, hold on, is the interventions. So the Swiss, oh wait, sorry, that's Canadian dollar. Either way, Swiss index or the Swiss franc is not really an asset that's going to continue to run any higher. I say that relative, obviously, it could run much, much higher on the H4, the daily, but on the grand scheme of things, you're not going to see the Swiss gain a massive amount of value and stay at that value because that's not beneficial. The S&B doesn't like it. They will intervene. We've seen it before. And we might see it again if we do see the Swiss continue to appreciate. So I'm quite happy to buy dollar Swiss because I think that narrative is enough actually to keep investors away from the Swiss for a while because the Swiss is elevated. I mean, again, look at this chart. The Swiss has been very, very strong. So I think because it's common knowledge that the Swiss franc doesn't really have the ability to continue to run, it's not even really worth being a long-term buyer of. So I think a correction is quite a solid reason. Will the Swiss become the new carry currency if the yen interest rates become normalized? Yes, yeah, absolutely could. Sonics, yeah. It's a great point actually. I've not covered I've covered a lot on the yen, but yeah, the Swiss actually I've not covered that much. So yeah, maybe I need to do a video on the Swiss. We can break down that topic. But yeah, that's a great point. So, guys, that brings me to the end of the watch list. Is there anything that you want to ask? Is there any charts you want me to go over? I'll give you a minute. I'm just going to take a drink. Just give me 1 second. Will you still upload video about Japan, possibly during... hold on. Oh, yes, I remember you asked that last week, didn't you? I completely forgot about that video. I will do that, yes, absolutely. I do apologize about that. Do you see Nikki? No. Oh, I did. Yes, actually, yeah. Let's just have a quick look at the Nikki. The put to call on the Nikki is alarming, to say the least. Here. Look at that. And, yeah, I mean, extreme fear? I don't know. I don't trade the Nikki. I don't know that much about it. So I'm not really going to pay that much attention in terms of the chart itself. But yeah, I mean, this is a significant thing. Let's just take a quick look at the Nikkei chart and we can, let's see what's going on. Yeah, I mean, I don't know. Why is there extreme fear? I don't know, man. It's not my asset of expertise, but yeah, it's a bit concerning. You went long, Nikki. I mean, I may do the same. Nick said it could be a technical problem with the Edge Finder. Yeah, I mean, I wouldn't be surprised, to be honest with you, if that is the case. That seems huge. Okay, yes, that's it on my watch list. There isn't anything else really. There's also no new questions coming in. So guys, as always, I'll send some charts over in my file or in my channel. You can also ask questions in the Elite chat. I'll have this live uploaded on YouTube as well, so you can watch it back if you did miss anything. Have a great one. We will see you all very, very soon. Have a great trading week. Enjoy the rest of your weekends.